Hello, thanks for joining me for the Bearish but Paid channel. Today we're going to focus on how can we play the AI bubble bust. We're going to focus on deep dives on some bearish funds that pay a high yield, high dividends, while being negative on some of the high flyers in the market. First, our disclaimer, this video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing in this content should be construed as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions, including buying or selling any securities. First up, we're going to walk through our macro regime to understand where are we at in the markets. U.S. stocks are still near all-time highs. We are in correction. You can see in the last week we broke below this nice trend line, which also coincides with the 50-day moving average. We are pretty close to having an official correction here. We had a nice jump on Thursday at the beginning of the day where Nvidia beat estimates and the stock market jumped accordingly, and then spent the whole day reversing and closed at the loss of about 1.5%. This doesn't happen very often. This is the kind of signal that is worrisome, that this corrective mode in the market may be turning into a longer term trend here. But waiting for that confirmation of a reversal of trend, what I want to see here is the buy-sell histogram starts coming back up to neutral and getting into the green. That would be a good signal to buy back in. Also looking at the global inflation stocks, just to see how they're doing, because this could spur on green shoots on the U.S. economy as well. But as you can see here, we have had a little test here. We tried to get green, but immediately turned back into the red. So we are still in a downtrend with respect to global inflation-related stocks. I like to look at VIX versus the 3-month VIX and ratio. Here you can see in these smaller charts below S&P, we have switched over to a red regime here where volatility, short-term volatility is above the 3-month volatility, so it's a backwardation. This is flashing red. Usually when it turns to green, it's a good time to buy back in. And again, we are in red. I'm also looking at all of the AI bubble stocks, the big high flyers, the big AI names. And here you can see that they're not showing a lot of strength. They are in a third round of downtrending markets with respect to these bubble stocks. Gold is building a pennant or a triangle pattern here, and we could see it break up from here. We want to see that trend line break, show a new breakout, or this trend line here could drop us down and continue the correction. Kind of have a zigzag correction here. If you want to kind of look at what gold did earlier this year, where we had this flat pattern where multiple times we tried to retest the upper end of the flat, and it took 5th time before we could break out above it. So I expect gold could be sideways here for several more months into January or February. If it repeats what it did earlier this year, you see kind of some zigzag movements before we actually get a breakout. Oil, not very interesting here. We've got this long-term 3-year sideways rectangle. We are near the bottom at $57, $58. We're near the bottom of the rectangle. There's a distinctive downtrend. I would expect this to get down to 54. It could get down to in the 50s. Those would be excellent times to buy oil, especially if we get down into the 50s, $50, $52, $53. We're probably buying some at that point. But I do not see anything exciting here from a recovery perspective. I am long-term bullish on oil, but I do expect to see us trend down here before we are bullish again. All right, Bitcoin. I was looking for last week for us to hold support at about 84, and you can see we had some major breaks. So basically, Bitcoin is in a crash pattern right now. We had a potentially turnaround or green shoot today. We'll have to see if this green bar closes green. Action from Thursday being a long wick below the price close, that's potentially bullish as well. So a couple of bullish candles here that could imply a resumption of the trend. There's also kind of overall washout of sentiment and a lot of negativity. So that might be a contrarian signal that you could start seeing things improving. I want to look for our histogram here to turn green before I would initiate new positions or start doing buying. All right, we're going to dig into the bearish funds. And basically what I'm looking for is kind of a game plan how are we going to play the future bear market? Assuming we're not in a bear market right now, we're in a correction. It's yet to be determined if this correction will turn into something more ominous or more long-term. But yeah, how can we play this? So what I do want to be prepared with is if we get a long or multi-month bear market like we did in 2022, that we can offset some of our losses with some of these tactical bear funds. So indicators to watch. We want to watch how the stock market correction plays out. That'll turn into a longer term trend. And we can use our regime tracker, our buy and sell signal to kind of give us a red light, green light on that. We want to see what the reaction is to AI news and earnings announcements. So case in point, the Thursday reaction to Nvidia earnings started extremely bullish the early morning, and it turned immediately to a bearish day. That's an example of kind of a signal that maybe the AI trade could be over, could be the beginning of kind of a retracement. I do see the AI trade being very similar to the .com, actions we had back in the day with anything related to .com or internet would behave this way. So I'm looking for that reaction, and really to see if the AI trade starts reversing. Also related is, can the market be drawn down because of recession risks? So want to keep a close eye on unemployment rates, manufacturing activity, and housing activity. So those are three things we're looking at. Right now, none of those are, all are very negative, but they're not getting worse. Housing activity, in fact, let's see if we can to chart, just to pull up a house builder just randomly here. You can see we've had this longer term downtrend, and we had a very bullish day on Friday. So maybe, and this is probably related to the understanding that the Fed will have to cut interest rates, so that the housing stocks just go with that. Another example of measure housing activity is Builders First Source. This is a supplier for home builders and so you can see here they had the same reaction on Friday. So could be some improvement coming on the housing side. We're going to want to see how the stocks behave. So how to play these, a bear market. And basically we have steps here that we can build into. The YieldMax short NASDAQ 100 option income strategy. This is short the NASDAQ 100, and it's paying about a 32% distribution right now. And it basically behaves like the reverse of JEPQ or a lot of the other NASDAQ-based income strategy. SLTY covered put strategy on 15 and 30 high vol U.S. equities, and we're going to drill into that a little bit more. This shows distribution of about 100% right now. So very interesting to see if this can help us in a bear market. If we have a real bear market on U.S. stocks in general, and many stocks are losing value, will this SLTY help us offset some of our losses? CRSH or crash. This is a put strategy on Tesla. So it's reverse. It's like inverse Tesla. That also shows an extremely high distribution rate right now, 125%. And dips is a short on Nvidia, and also using covered put strategy. And this could offer us an 82% distribution. So let's pull some of these up. We go on this chart here. So we'll look at Nvidia or dips first. As you can see, this just loses value as Nvidia's been rallying pretty much all year. But you can also see how it behaved here in the February timeframe. Had some nice rallies as Nvidia was in correction mode. So just to pull this over here, so I can get my tools. So just to show 18% capital appreciation if you bought this at the turn and held it through Liberation Day. If you use this throughout Liberation Day, you could have offset some of your losses in addition to making 100% on your income. Coming in here to the more recent action, you could see what we want to do is we want to look for buying these funds when the downtrends have reversed, right? So this looks like still downtrending. Potentially, there was a nice little green buy signal on our histogram. And yeah, we could start nibbling here and getting in. This will rally very nicely when we get to the Nvidia in a downtrend. Just to show kind of how this would look like, I'm going to pull up winter, which has had a similar signal. This is the bearish MSTR, the bearish MSTR. And you can see here, you know, if you had bought the first or the second signal, which I ended up buying here, we've had a nice rally. Looking for this to continue until Bitcoin has bottomed. And therefore, you know, from bottom to top here, we're up 38%. If we had bought the first, let's put it here. If we had bought the first signal bar here, we'd be up 29%. All right, let's look at crash. Crash is again the Tesla inverse. I can go back to look at how it behaved back in February, and you can see here it did tend to trend for a few weeks here as Tesla was in a downtrend. So it picked over here, 38% is a pretty nice gain for short-term holding. You don't want to hold these forever. Obviously, they tend to go down when the stock markets go up, but holding them for a few weeks in order to offset losses in other funds is not a bad idea. So here we had a buy signal a couple of weeks ago, and we're still in the green in the buy. And this is an option to start diversifying. Again, it pays, what did we say here? This one pays 125% dividends, or distribution. So it's very interesting to say the least. And SLTY, let's take a look at that. This is basically like an inverse SLTY, but it uses different stocks. So it's not bearish on the same stocks you might have in your ULTY. It's bearish on pretty much any stock that has a high implied volatility. So this fund doesn't have a long history. You can see this is the first time it really started behaving a little bit more bullish. So yeah, again, this could be interesting, especially if we get into a long-term recession or a longer-term bear market. And the fourth one that we'll talk about is YQQQ. Similar pattern again. This did show our green buy signal. And it's been accelerating a little bit the last few days. So this is a bit of interest to me. So I think one thing I'm going to start doing is starting to allocate to some of these funds in order to have a toe in the water when and if the big drawdowns happen, when the stock markets are correcting for a longer period in a trending way. And the goal would be to kind of ride these for short periods of time and basically get out when the markets are behaving more bullishly. All right, I did pull up some additional information about SLTY just to show the current holdings for SLTY. These are all basically puts that are sold against all of these companies. All the companies are chosen based on their high implied volatility, which allows for the higher income. So there's a smattering of all kinds of companies here, but you will see high flyers are often the ones with IV. So Riot is on there, UUUU, Uranium has been going crazy. RGTI was a huge trend a few months ago, quantum computing. You can see here that you can make quite a bit of income selling puts on these high-flying companies. ETF. Right, next we're going to look at the portfolio, or our income portfolio. So we are at just under $133,000 total value. I've got $21,000 in cash. I've got additional margin that I'm planning to use, $21,000. And so our total number of positions, 123,000. And we are going at monthly income of $2,700 a month based on the current distribution rates for each of the funds. Last week, I mentioned I was going to buy into EIC, ECC, OXLC, and XLT. Right now, I'm waiting for these to finish their kind of bear market drawdown. Just picking up on EIC, for example. You can see here we are still in a downtrend, not really seeing the buy signal yet for the green bars to come up. But I will be buying in the starter position when we get to the green bars, and then the idea would be to continue stripping in or buying additional positions as we go forward in time, as we hit the trend reversal, hopefully. The worst case, we are buying in at a very, very high distribution rate, right? No other changes to the portfolio this week. I'll also be looking at buying into the bearish funds that we just talked about. And so establishing starter positions here to try to offset some of the other bullish positions we have, like WPay and SVOL, which only work in bull markets. These need to be offset. UDTE as well is losing a little bit of value. My overall allocations here to EPI and FII JEPQ are still positive on the purchase price on the cost basis, but these could also start eroding into losses. So we want to see that hopefully the YQQQ can help us offset some of that. Starting some positions here, and we'll see how that goes. Want to see how that plays out throughout a corrective and or bear market trend. And the last section here is just to talk about what's next. Next video next week, we're going to focus in on closed-end funds of funds. FOF, YYY, and CEFS. All three of these provide a nice distribution rate, and we'll dig into those a little bit more. We will, again, check in on the market regime, dive on those three funds, and we'll provide a weekly portfolio. If you like this video, please subscribe, like it, and leave a comment. I appreciate all comments, good or bad. Thanks very much. Have a great week.